Hey everyone, welcome back to Corporate Decoder, where we decode the secrets hidden within corporate filings. And today we've got a doozy from CytoDyn Incorporated that is all about, well, let's just say shuffling deck chairs on a ship that might be changing course. Before we dive into the nitty-gritty, if you love getting these unfiltered looks into what companies are really saying, make sure you hit that subscribe button. And hey, we've got a fantastic community over on our Discord channel, linked down below, where we break these things down even further. Alright, so on the 21st of November 2025, CytoDyn Incorporated dropped this report, and the headline-making event here is a pretty significant change in their corporate structure. The big news is that they've amended their charter, which is like the company's birth certificate. They've done this to increase the number of authorized shares of their common stock. Now, what does that mean in plain English? Think of it like a bakery deciding to print more blank recipe cards. They had permission to issue 1.75 billion shares, and now they've boosted that to 2.25 billion. That is a 500 million share increase. Why would a company do that? Well, it gives them more flexibility. They could use these new shares for future fundraising, like selling them to investors for cash, or perhaps for stock-based compensation for employees, or even to acquire another company. It is like having more running room, but it can also dilute the ownership stake of existing shareholders if new shares are issued without a corresponding increase in the company's value. But that wasn't the only thing happening at their annual meeting on that same day. Loads of important votes took place. First up, directors. The company put forward 5 nominees for the board of directors. And looking at the numbers here, it seems the shareholders showed strong support. For example, for Stephen M. Symes, there were over 461 million votes in favour. Ryan M. Dunlap also saw a huge number of votes over 465 million. It looks like all the nominees were elected to serve until the next annual meeting. This is crucial because the board of directors is responsible for guiding the company's strategy and overseeing its management. When shareholders elect directors, they are essentially casting a vote of confidence in the leadership and direction of the company. Next, they asked shareholders to weigh in on the company's accounting firm, CB CPAs PC. The vote here was overwhelmingly in favour, with over 721 million votes for. This is important because having an independent auditor is vital for building trust with investors. It means an outside firm is looking over the company's financial books to make sure everything is on the up and up. A strong vote of confidence here suggests shareholders are comfortable with the firm's oversight of the company's finances. Then came the vote on executive compensation. This is often a hot button issue here. Shareholders voted on the pay packages for the top executives. The results show over 389 million votes in favour, but there were also a significant number of votes against, over 108 million. This mixed result indicates that while a majority supported the compensation, there is a noticeable segment of shareholders who are perhaps questioning whether the pay is aligned with the company's performance. It is a sign that the board needs to pay attention to shareholder sentiment on this front. Following up on executive pay, they also asked shareholders how often they'd like to vote on it advisory basis. The clear winner here was a 1-year frequency with over 451 million votes. This means shareholders want to have their say on executive pay every year, which is pretty standard practice and shows a desire for regular accountability. And finally, circling back to that big share increase we talked about earlier, shareholders actually voted on it directly. The proposal to increase the authorized shares from 1.75 billion to 2.25 billion received a significant thumbs up, with over 671 million votes in favor. So, the shareholders have given management the green light to issue up to an additional 500 million shares. Now let's put on our investor hat and see what this all means. The amendment to increase authorized shares is a double-edged sword. On one hand, it gives CytoDyn Incorporated a lot of flexibility for future growth, be it through new funding rounds, strategic acquisitions, or as an incentive for its team. This is generally positive for a company looking to expand its horizons. On the other hand, we saw a substantial number of opposing votes on the executive compensation and a large number of broken non-votes in the director elections. This suggests that while the shareholders are willing to grant management more tools, there is a segment that isn't entirely thrilled with how things are being managed or compensated. It is like giving a chef more ingredients, but with a watchful eye on whether they can actually cook up a winning meal. The real question for CytoDyn is how they will deploy these new shares and whether the executive team can deliver results to justify their compensation and the increased share count. The risk here is that if these new shares are used without a clear path to value creation, existing shareholders could see their ownership percentage diluted without a commensurate increase in the company's overall worth. It's a cautious signal from the shareholders they're enabling growth, but they're also demanding accountability. Alright, that is our deep dive into CytoDyn Incorporated's latest filing. What is your take on these share increases and the shareholder votes? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up. And subscribe for more fearless corporate analysis, and don't forget to join the conversation on our Discord channel. The link is in the description. Thanks for watching, and we'll see you in the next Decode.